Nice.
I'm going to hand the reins over to you, Morgan.
Awesome. Or do they all come in? Because I have a weird screen right now. Hang on, let me fix this. Are they all in now? Oh, perfect. Okay, I see them. Sweet. I'll add a few more people. I see them keep adding, so we'll probably let them come in for another 30 seconds. I'm so excited about this one. I have been stalking Heather on Instagram for a while now. We've had mutual friends in this area, and I've seen so many raving reviews, and she's not, I sat down for a drink with her the other day, and we were just, talking and seeing what this was going to look like for her. And right away, I already knew it from her Instagram, but right away, she's very real. She is not the type of, I think so many people in the finance world, they push savings, savings, savings all of the time. And savings are great to an extent, but you have to then do something with it because it's sitting there doing nothing for you. So I love that she's not just about, here are some of your goals and this is how we're going to save to get there slowly. It's looking at your goals and breaking them down to actually achieve them while also having fun and living your life. And I think that's so important and kind of unique coming from the finance world. So I'm super, super excited about this. She sold me immediately. She's going to be my new finance planner. Me and DeAndre are going to sit down and be able to actually work on our new goals, whether that's buying properties every year, whether that's going on trips, doing a whole bunch of stuff. I know that she can help us get there way better than we will get there on our own. And it's really nice to have your finance person. So I'm going to kind of let Heather share her slides, take the reins from here, and we'll kind of go.
All right. How does that look? Is that right?
That looks perfect.
Okay. I'm getting used to the Canva PowerPoint slide thing,
I'm not quite used to it.
And by the way, Morgan, it's not or, it's and. Remember, it's and.
Yes.
Development and. Okay. So hi, everyone. I'm Heather Townsend, and I own my own financial planning firm. I'm here in sunny Scottsdale. I have twin girls. You'll see them in a minute. Really quick, a few things that I want to tell you is I'm a fee-only fiduciary financial planner. And why I want to share that is because even if you don't work with me or whatever, I just always want someone to know that that is so important when you hire a financial planner, because that means that you are not being sold products. So I don't sell any products. I don't take any commissions off of what I put my clients in. Truly, when I recommend something, it is in my client's best interest. I took a legal oath to always act in my client's best interest. So when you're looking for a financial planner, please make sure they are those things. And I'm also a certified financial planner, CPA, certified student loan professional, and registered life planner. I got to stop getting credentials. It's a problem. And I mostly work with business owners and high net worth individuals. So that's a little bit about me. And I love working with business owners because normally they come in and they're like, I'm so overwhelmed. I don't know what to do with my finances. And okay, there's money here and there's money here and I'm like, I got you. And then it's just, we're going to go through the processes today. I'm going to explain how I organize my clients' finances, especially realtors. It's very specific because you guys have uneven cash flow. There is no way it's even, right? You have some really big months, and then you might have some months where there's nothing. And there is a way to even it out. There is a way to give you income stability and financial security. And I want to share that today. And the other thing that I want to say is there are no stupid questions. Like, this is a judgment-free zone. This is not taught in school. I lead with my heart. I really want people to not be overwhelmed with finances and be empowered. So I'll just leave that with here as I'm giving this presentation, because it might start stirring up some feelings or some feelings of overwhelm, and just don't. I got you. So, all right. So let's see. Does this work? Yes. Okay. So the agenda today, very high level. First, we're going to talk about how to get your house in order. I've kind of applied it to real estate, you guys. You know, the number one gets really like excited when she gets all like, "Ooh, I got creative." So financial structure, how to like structure your finances like in your business versus your personal, and those are different, and I'll explain. a little tidbit on investing, and then finance team. The other thing I want to say that makes me different too, so that you guys, I am not the financial planner that thinks you should need to put everything in the stock market. I have a lot of clients that are in real estate, and that's what you should be investing in because you guys are in the markets and you know when there's a deal. But you just need to balance it with liquidity and other investments, because I will tell you, the wealthy, the reason they stay wealthy during recessions is they have a lot of lifeboats. You can't have all your eggs in one basket. So you should absolutely be investing in real estate. It's what you know. You're probably some of the best people to be doing it and determining a deal, but you gotta also diversify. It's just like my clients with Amazon, and they get Amazon RSUs. They can't just own Amazon stock. Their income is tied to Amazon. So it's not just real estate, it's just a general thing of, just wanted to say that. So I have to say this disclaimer to keep my compliance officer happy. You guys, this is not intended as investment, tax, accounting, or legal advice. Take it at your own risk, i.e. go talk to your people. And I am in no way offering or selling securities, that's obvious. So just take this information at your sole risk. This is for education purposes only. Okay, I think my compliance officer is happy. Moving on. All right, so this is a little bit about me. This is my world. This is my why, but I really want everyone to take a minute. Why do you have your business? Why'd you start your business? What do you want your business to give you? What is a dream of yours? I know I just asked you a lot of questions, but I want you to just write some things that come to your mind. And this is really important because we're going to tie it back at the end. But I always start with my clients at the why, because if you don't know your why or what you're trying to achieve or where you're trying to go or the life you're trying, like, you're probably not going to get there. I know that's like, you need to know your numbers. You need to know what you're trying to go so we can back into it and make it actually happen. So you can tell this stuff makes me excited. Sorry, I'll try to pipe it down. Morgan's laughing at me.
It's perfect. I love it.
So I always start here with my clients, because then you have the energy to actually do the work because you know your why. And a little bit about my why is, you'll see it always doesn't have to make financial sense. I'm a car girl. I will only drive German or Italian vehicles, and I hope to buy myself a Ferrari one day. And I have twin girls and an amazing husband and an amazing Bernese Mountain Dog. And I want to give my family financial security and take them around the world. And I refuse to be in Arizona in the summer. We go to Park City and spend the summer in Park City. It's not cheap for the whole summer, but that is my why. And I want to make the world a better place by helping good humans become wealthy, because that's how you change this world. All right. So does everyone know their why? Are we here? Are we ready to go through the work on how to get to your why? Okay. Thumbs up. Okay. So first, we have to get your house in order. It always starts with having a solid financial foundation. So these few quick things we'll start with, you need to do in order to get it cleaned up, let's say. So I'm sure most of you have, but if not, get an LLC or a PLLC, depending on what state you're in and their rules. That's a lawyer thing, but definitely an LLC or PLLC to protect your assets. This is a litigious society. But here's the thing that happens. Just setting up an LLC is not good enough, because if you are commingling your LLC with your personal expenses, like, oh, I'm going to take my dog to the groomer and put it on my business credit card, that's not a line in the sand of business versus personal. You just commingled it, and you are not treating them as separate entities. So you need to have a business bank account and a business credit card, and all your business expenses and income and everything lives in there. The only reason you are moving money in and out between business and personal is if you are paying yourself, or you need to contribute money to the business to start it, or you're making some big investment in the business. So it's a capital contribution. Otherwise than that, there's a line in the sand. So for my clients, myself, I have a business checking, a business savings for taxes, a business credit card. In my personal life, I have a personal checking, a personal high yield savings, and a personal credit card. And personal expenses and stuff live over here, and business stuff lives over here. There is definitely a line, and this is so important. The other thing that this is going to help you is at tax time, you're going to know what all your deductions are. It's going to make tax time a lot easier. You're going to be able to have clean books. You can even hire a bookkeeper when you get there. There are multiple positives to all of this. So that's your house in order, okay? Then you got to know your numbers. Now, this is probably the part that is the most painful. I am not going to sugarcoat it, but it is so, so important. So sit down. I don't care if it's a piece of paper. I recommend a Google Sheet so that, because it will evolve, but you need to have one sheet for your personal expenses and one sheet for your business expenses. So your personal expenses are like your mortgage or your rent, your auto insurance, that might go through business depending, your like, I don't know, your electricity, your groceries, whatever. How much does it cost? How much do you need from your business to pay you to live your life? Okay. I'm going to give examples with even numbers here to follow through. So let's pretend, who's a fun realtor? That's a woman. Can we give someone? Does anyone come to mind that like everyone loves? I mean, I'm obsessed with Ryan Serhant, so I could use Ryan Serhant, even though his number would definitely not be 10,000 a month. But
I think a few of us are Sirhant people too, so Sirhant's perfect.
okay, so we can use Serhant. So Serhant, like it doesn't work. We're gonna just pretend we have a Sally. Okay, Sally. Sally needs $10,000 a month to live, to like pay her credit card every month, to pay her mortgages, her whatever. And then in her business, to run her business, to pay her business insurance, her broker fees, her marketing expenses, whatever you have, your lockbox, I don't know, whatever you guys have, website, it's 5,000 a month. Okay, so you need to know operating overhead in your business and your personal expenses. So really, to just survive, Sally needs $15,000 a month. If you look at this, right? To operate her business and to pay herself personally. Are you guys with me? Okay. Okay. No, okay. So now here's the structure. So you need to start putting buffers in your place. This is security right now. So you put, what I normally have with my realtor clients is I ask them, how long have you gone without a commission? Like ever, right? Maybe it's 2 months, maybe it's 4. It kind of depends. I've seen the average be somewhere between 2 to 4. And some are more also like, I just want 4, even though mainly I average 2. 4 is where I feel the most comfortable. So we start building 4 months. Let's just use Sally for 4 months of business expenses that we keep in her business. So if she goes 4 months without commissions, she doesn't have to pull from her personal life, right? She doesn't go negative. She doesn't go into credit card debt. We also always stick to that 10,000 a month that Sally needs. So even though maybe she sold a $5 million house and had, you guys, someone tell me, what is that commission? Like $90,000, $120,000, something ridiculous, right? Okay, so I'm
120 to 150, yeah.
Okay, 120, 100, that's a big month, right? But she's not paying herself 100,000 that month. She's still paying herself 10,000 a month. She is continuing to pay herself that 10,000. That we build a pay yourself buffer as well. So we do 10 times 4 months for Sally for income stability. So she's going to have $60,000 in her business so that if she goes 4 months without a commission again, she's not in credit card debt and she's not having, I think the term in your industry is commission breath. I hate that term. I'm waiting for a better one, but like no one wants that, right? And so that has given my like realtor clients just a really big peace of mind. They now have income stability. But if you're Sally and you had $150,000 a month, you're going to have some extra even after you pay yourself the 30% for taxes and you keep the 60K for buffer. You will still have extra. And that's when we go back to your why. What is your why? And that's where the extra gets allocated. And it is so fun. So I'm going to walk you through. This is kind of like a tool that I use, that I do with my clients. We might do this quarterly, but let's just pretend that they had $100,000 a month. So we save 30% for taxes. The current business bank balance is 125. We keep 30% for taxes. She might have like a $4,000 credit card. We make sure we pay that off. We keep her business buffer that I just walked you guys through. She has 31,000 to distribute to herself. Okay, 10,000 she pays herself monthly. She wants to do a little bit of saving for tomorrow. We put 4,000 in a solo 401k, 10,000 for her dream trip that she wants, and she wants to work towards her remodel. Boom. Like that is stability. So that's kind of how I walk through it with my clients in my little handy dandy spreadsheet. When I hop on a call, I look at their bank balance and I'm like, okay, here we go. What was your revenue in the last month? Any questions on that before I go to personal? So on personal, so that's your business. Remember how I say they're
I have
different?
a quick question, Heather. Sorry.
Yeah.
The business buffer, is that going in your business savings account, right? Okay.
Mhm.
Okay.
Because now you have personal, right? Now these are like different entities, right? So I still think you need to have a personal emergency reserves as well. We're all humans. It's not if, it's when the unexpected expense happens. I can tell you recently, my AC guy has been in my house 4 times. Water has fallen through the ceiling. It is now just comical. I am just laughing at the situation. And of course, that's also why I need new tires. And then like, oh, my bathroom's getting remodeled and something went wrong. I mean, I could just keep going on, but I mean, none of this is new for anyone. It's kind of comical, but when it rains, it pours. It's always more than one thing. So that's why you also have your personal emergency reserves. It might be, you need a new roof, like whatever it is, but normally that's 3 to 6 months of your personal expenses. It's in a personal high yield savings. And then I always keep in my checking account, my client's checking account, you need some buffer. Do not get it down to like $10. That like would give me a heart attack. Like keep 2 or 5 after you pay all your bills. Like let's not live on the edge here. Okay. We don't need to be stressed out unnecessarily. Okay. But that is kind of the structure really quick that I build for my clients that are realtors to give them that stability. Because I think I hear a lot from realtors that are successful, like there's no stability. I feel really uneasy, or they keep too much cash because they don't know. And there is such thing as too much cash too, right? Like we want to allocate it towards investing for tomorrow and living your best life today, while also keeping all your stuff safe and you not having to worry about when your next commission is coming in. So, on that, to go back to investing, it is a must. I think what I will say about that is, if you're just keeping money in a bank account, I don't know anyone that has gotten wealthy having money in a bank account. I'd like to hear someone that has ever heard of someone becoming wealthy by just keeping money in a bank account. I'm waiting. I really haven't heard of anyone, right? Like it's either real estate, they owned a business, they invested in the stock market. It's one of those 3 things, or won the lottery, but they ended up flushing everything down the toilet. So yeah. So, you got to invest. And so that's why I like to create the structure. So you know how much to invest, but when you do invest, you don't have to come back and sell that investment, right? You don't want to have to do that at the wrong time. And so just please invest. That's what I'll say, so you can grow some wealth. And I literally will say that with realtors, it's so funny. I don't know why, but it's either so much cash or they're in debt, like living on the edge. There's nothing in between. And I'm here to say, and I've never been able to generalize. I don't know what it is, but that's like at least the realtors that have come across in my world, that is the extreme of it. And I just want to say it doesn't have to be that way.
I know.
What was that? Does someone have a question? No? Okay. And then if your CPA or someone is recommending like to save for the future for retirement, I recommend a solo 401k over a SEP IRA. I just want to say that really quick because if you are become a high income earner, I want you to be able to do the backdoor Roth and I want you to save all the taxes and you can save more taxes and put more away on a smaller amount with a solo 401k and a SEP IRA. And then going back to diversification, like it's the same for me. Real estate could seem scary, right? Because like I'm not in the market every day, which is where I rely on a who, or I would like, that's why I would get a real estate agent. And I'm like, hey, these are my, like I was talking to Morgan about it. And I was like, yeah, I am not like, I want a realtor, who she's one of them, who I'm like, this is the number that I want on my return on my investment. I'm looking for this type of property that will cash flow this, or at least break even. Like, but I'm not, I want her to go find it. She knows where the market is. Like, that's not, but that doesn't mean that I'm not going to also invest in real estate, right? Just like you guys should also invest in the stock market. It's both. Like, you want both. It's the best. It doesn't have to be or, it's and, so that when the real estate market goes down, you have the stock market to lean on for liquidity. Or when the stock market goes down, you can use that. You have your real estate investments if you need them, right? Like, just make sure you stay diversified because that's also where I've seen things like go really awry for people is when they just put all their eggs in one basket and your income is tied to real estate. So just make sure that you just have the stability in place. Okay, I get a lot of questions on this of like finance team and who does what. And I think there's like a lot of confusion in the finance world on this. So if everyone's okay with it, I just want to walk through what each of these do. So a bookkeeper is the person that goes in and like categorizes your expenses in QuickBooks. They are manning your QuickBooks so that it is a very pretty report for your tax preparer to prepare your tax return. And you can also see, hey, are you profitable? Are you not? Are you in the red, right? No, we want you in the black. And it's good insight, but also I want to say that people have this misconception that their QuickBooks is going to tell them like what's going on in their business. No, it's the past. You have to be able to project forward. QuickBooks is past looking, not forward looking. Past looking? Okay. But anyways, but that's what a bookkeeper does. And it's really helpful actually if you have your numbers pretty like updated for your tax preparer, because that's where tax strategy comes in. So in November starts to become my busiest month because I am doing tax planning meetings with my clients to say, based on their profitability, if they are an S Corp, what W-2 should we run for them? What payroll should we run for them? We don't want to run too much because we pay too much payroll taxes. So having a good bookkeeper to have your QuickBooks is great. It allows then the CPA to run projections and tell you if you've paid in enough or not. Remember that 30% that you should be putting aside of your revenue, preferably in a business savings account. And then a financial planner, advisor, fee only and fiduciary, they are more like the forward, like what do you do with all this extra cash? Where do you invest it in the stock market? Do you have enough insurance? Are you protected? Those kinds of things, depending on the financial advisor. So any questions on those roles? Because I think people get those confused. No? Okay. Now let's bring it all together. So do you guys remember how I made you write your why? I want you to come up with numbers to your whys. What do you need in your life? Is there something you need? Like someone today told me they wanted to fly first class everywhere. And that at first sounds like really overwhelming. But then it's like, okay, well, how many flights do you take a year? How much of them are domestic? Let's just put 1,000-ish for a domestic flight for first class. And like Europe, probably 15 is a good rough number. What are you doing? 2 of those a year? Okay, you might need 30, 5 flights, 5 for first class. You got 35 a year. See how that wasn't that overwhelming of a number? Like people think first class and it's like, oh, that's hundreds of thousands of dollars. No, that's a private jet. No, it's like 35. So like think of your why and kind of start putting back numbers. And that's why these numbers are so fun, because then you can be like, oh, I only have to go sell another $1 million house and I get to fly first class everywhere. Like that's my, what do you guys call it? GCI number, the millions of dollars you have to hit a year. Yeah, whatever.
Yeah,
You
GCI.
know. But you like, if you know, I love building this with my clients, is I kind of like create a fun cash flow. And I'm like, okay, now this is your ideal life. This is what it will cost. Then we back into what do you have to earn? And if you know your numbers and you have enough in your business, you're much more likely to go and implement those things of your why. So for me, like I know to go be here out of the summer, it's like 20 to 30K. So that's a helpful number. It's a lot, but it's definitely cheaper than me having 2 homes, right? So like, that's just my number. And I save for it throughout the year and I add that to my cash flow. And that's how much I need to generate to get my family out of the summer in Park City. So I hope your dreams now feel a little bit more realistic, or you can start figuring out what you need to do to get there. And if this is in any way like overwhelming, one step at a time. That's always what I want to say, is that you just got to start implementing it, whether it's like, go put your business structure in place, go fix your organization. Like if you don't have a business credit card, go get that. If you are commingling, clean that up. Like just do one step at a time, and then you start feeling better and better, and just write it down. And then I think that's it. I talked like way faster than I thought. Maybe I thought I'd get like more questions. I don't know. I can talk about like S corps and umbrella insurance if you want me to, but really quick, this is my, I have 2 companies. I have a consulting firm that I'm launching because I'm starting to max out on clients in Townsend Financial, and I don't want them talking to anybody else than me. So I have a financial planning firm, and then I also have a business consulting firm where I'm launching a group coaching program because I know so many business owners are stressed about this. So I'm actually going to have a 5-week live coaching program that walks you through my spreadsheets and makes you build them. I actually want you to build them. So what questions do we have? Do we have any questions? No?
I know some people were saying in the chat that they had questions. So feel free, anyone that has a question, to raise your hand or send it in the chat and we'll make sure that Heather sees it. But I know somebody was saying, definitely if you could go into a little bit more detail about the S Corp versus the sole proprietor, that would be great, because I know we all probably have questions about that.
And if you guys, I want to actually talk about that here. So let's talk about taxes really quick. So there are 2 different things about a sole prop and an S corp. So as a sole prop, you are filing on your individual tax return. You're not filing a separate tax return. It actually flows on your 1040. It's just a regular tax return. It's your regular tax return, and it just has its own form. And so when you convert to S corp, and it is kind of different, but I would, for everyone, based on if they have a significant other that has a W-2 and what wage they're earning and what income level they're at, that kind of starts to determine whether to convert or not. But the general rule of thumb is you should start looking at it when you have probably over 100,000 of profit. But why they are better tax-wise, and if you are earning over that, is because when you are a sole prop, you are paying self-employment taxes, which is about 15%. For ease, we'll say it's 15.75 or something, but we'll use 15 for ease. It's about 15% on everything of profit plus your ordinary income tax bracket, right? So just, it's an additional 15%. So if you have 100,000 of profit, you're going to pay 15,000 in self-employment taxes on top of your regular tax rate. So if your regular tax rate, for example, is 22, you're paying 37% of taxes on your profit. If you become an S Corp, take that 100,000 for ease. You have to pay yourself a reasonable salary as an S Corp. You have to run payroll. That's the rule. That's the IRS. So you will pay that same 37%, your ordinary income tax bracket, plus the 15 for self-employment on your 50 of W-2, if that's what we run. But that other 50, you don't pay self-employment taxes on. So that's where the real difference is. You save that 15% on what you don't run on as a W-2. And so that's why a lot of people convert to S Corps. But there's a caveat to that. You got to make sure that the tax savings are more than what you're going to pay for payroll expenses. And you also have to now file a business tax return. So there's more complexity. That's okay, but you just got to make sure the tax savings outweigh the additional fees you'll pay to keep that up. And so on the taxes really quick. So how I said 30% for taxes, how I run this for my clients is, let's say they have $100,000 month, 30,000 will go into their business savings. And we keep adding throughout the year. If you are an S Corp, we don't determine what payroll or W-2 we are running you until the end of the year. Why? 2 reasons. One, we don't want to have that W-2 be any higher than it has to, right? Because you are locking in that 15% of payroll taxes, self-employment equivalent, right then. And so if you had a lower year for whatever reason, we don't want that to be more. The other reason is if you pay your taxes through withholding through the W-2, the IRS counts that as if you are evenly paying taxes throughout the year. So it avoids estimated tax penalties. So as a sole prop, you don't have that option. You have to be making estimated tax payments. The dates are 4/15, 6/15, 9/15, and 1/15. And if you don't pay enough throughout those periods, you start getting penalized, right? But if you're a W-2 and we just at the end of the year paid all, the IRS counts as if it's all even, and we just avoided the estimated tax penalty. And we're really paying in once we have the more full picture. We now know what tax bracket you're in, all of that. So try to meet with your CPAs in November, December. I know some CPAs are more tax compliance, like they just fill out the form and they're not really tax strategy. Hopefully you have one that is tax strategy and that will sit on a call and walk you through this, because it's, I think, a game changer and makes people feel a lot more control. And then you're also not like, oh, around 4/15, like, oh my God, what's that tax bill going to be? And like, what? I have to pay $20,000? Like, that's the worst feeling for anyone. We want to avoid that. So that's a little bit about like S Corp versus sole prop. Did that kind of explain what you guys wanted me to go into there? I know that's like really detailed. I wish the tax code was easier to explain, but you guys, if you ever looked at it, I think it's like the amount of pages I couldn't even tell you at this point. It's insane.
That's why we hire people like you, so we don't have to do that, because that's overwhelming.
Yeah, I try to explain it though in a way like with examples. I hope that kind of helps.
No,
The
that
other-
explained it actually very well.
Okay, good. Someone,
Yeah.
okay.
And then
Yeah.
you do financial planning not just in Arizona, right?
Oh yeah, I work with clients all around the country. Yeah.
And that's why she's the best.
The other thing I want to ask is like, who has investment properties here? I'm just curious. Does anyone? I'm not. Do a lot of people have them?
I think there's a few of us actually.
Okay.
I know a few people have their mics off, but there's a few of us I know have a bunch or have a few.
And normally like realtors want to buy investment properties too. I think that's normally always a goal I see. I've never met a realtor where they haven't wanted to buy an investment property. So one thing that I do want to say is like, it is really important to put that in an LLC. Just like how I explained your business should be separate, your investment property should live in a separate bubble too. And it should have its little tiny buffer for maintenance, right? Like the AC will go out, or the garbage disposal will go out, or the tenants will destroy it that one time, or whatever. So also build up a little buffer there. It's very similar structure. If you weren't able to get an LLC for whatever reason, because I don't know, you just didn't know, right? That's okay. There's such thing as an umbrella policy. And I don't know if you guys have heard of this. It's an insurance policy. You get it with like wherever your home and auto is, but it is my favorite way that I asset protect my clients for a very small fee. So like a client just ran and got a quote for a $1 million umbrella policy. 1 million sounds like a lot, but that's actually very normal. And it was only $400 a year. I don't know. What is that per month? Like $45 for $1 million of coverage. What that does, you guys, is if your auto or your home doesn't have enough protection on it, the umbrella comes in and like takes the difference if someone's suing you. And that's like a really big thing that I always have an eye for with my clients is, that's great if we're all building this, but I don't also want them to be exposed or anyone in a position where the wrong person you come across and they're going to take advantage of you because you're growing wealth and then it all goes poof. So I'm really big on the umbrella policy. And so if you don't have an LLC set up for your rental property, you can probably get an umbrella, and that at least protects you in some way. And I wanted to give some funny examples, but like it's mind blowing what this has. So my cousin's father, who's a wonderful individual, he's retired, he has this beautiful home, and guess what? His dog runs out of his house all excited and knocks his neighbor over. Guess what the neighbor's doing? Does anyone want to guess what the neighbor is doing? The neighbor is suing.
Oh.
And guess how much he's suing? A ridiculous amount of money that could totally ruin his retirement plan. But do you know what's saving his whole retirement plan and his whole wealth? You're going to guess what it is. I wish I had an umbrella right now because I'd hold it over my head. Like, it's the weirdest stuff. The craziest story I heard was like a shopping cart person was like driving the shopping cart and accidentally bumped into someone. And guess what that person is doing? They're suing the person for bumping them with the shopping cart. You can't make this stuff up. Guess what's saving them? The umbrella policy. Like the last one I heard was someone's driving their car and accidentally tapped someone on the bike. Tapped. The person didn't fall. They're suing. The umbrella policy is going to cover it. So I know these are weird stories, but like, so for your rental, as you guys are building wealth, it's a cheap thing. I know people look at it as insurance as like this stupid cost. I actually like happily pay my insurance because I'm like, great, that's protecting me to be able to like protect the wealth that I'm building so hard and working so hard to have. So that's a little thing on rental or investment properties that I also wanted to speak about really quick.
I actually knew nothing about umbrella policies before and did not know what they did.
Yeah. So, they blanket over like your auto, your home, your investment properties. So if anyone can sue you in any of those things and you don't have enough, like, I don't know, you hit a McLaren in Scottsdale, that's not a very unusual thing. Your auto policy probably won't have enough coverage. So like having an umbrella is really important. So any other questions that came up?
One we saw, let me look in this real quick. Oh yeah, go for it.
So I'm my first year in real estate, and I have not sold a house yet, but I need to file my taxes, and I'm doing everything sole proprietorship right now.
Perfect.
What do you suggest as far as like all the expenses I do still incur? Should I still be writing those off on my taxes but I haven't made any income? I don't know where to go with that.
Yeah, you should absolutely write those off.
Okay.
There's again, the tax code, sorry guys, but I wish it was simpler. But if you hadn't started your business, like you're not open for business, there's a rule on like you can only deduct, I think it's like $5,000 of startup expenses, and then everything has to be amortized, meaning deducted over a few years. But if you were actually open for business and your recurring expenses, you will write those off. If you can't take the full loss, it should carry over for future years. So when you do start making money, you can use that to offset. So definitely keep track. And for now, probably to save expenses right now, like I just probably put that in Excel to keep track. pretty.
Okay, yeah, I do have an Excel spreadsheet, and I'm also using Waze to kind of help me categorize everything. Okay, that makes sense. Thank you.
No problem. I love these questions. Anything else?
Somebody popped in and asked, you kind of mentioned at the beginning, but maybe you have some more insight on it. A lot of financial planners,
The
I
soup
think
that I
that
made for you.
I want to. Okay.
I know, I was like, oh, I want food.
Yeah.
A lot of financial planners, I know that as real estate agents, and I kind of mentioned to you this in coffee, like they approach us because they want to be referral partners. They want us to just send them clients, and they usually are trying to sell, you know, life insurance, or they're trying to sell something to us, not actually giving us financial planning or our clients that. What are your thoughts on that? And like, how do you differentiate or give advice on differentiating between the good planners and those bad planners?
So that's a great example. And this is why I love the questions. Sorry, this will probably be a 5 to 10 minute tangent, but it's like so important. That's where like the fee only fiduciary is the difference. Like I recommend insurance to my clients, right? Like if there is a family, like a couple, and they're expecting their first baby, and the one of them could be the man too, this happens definitely, like he's going to stop working for a while because he wants to be at home with the baby, but now he's dependent on his wife to earn the income. And if she passes, what happens? Like, how's he? And then like, there's going to be no caretaker. They should absolutely have life insurance, right? Like that isn't, someone depends on you for your income. You should have life insurance. But so then I refer that to a life insurance agent that I trust, right? But I am not selling the product, because that, then I think you start having conflicts of interest. And what those insurance agents, most of the time, I don't want to say all of them, there are some good ones out there, but most of the time they sell these insurance products like universal life policies and whole life policies, and promising these things and saying that they're investments. I can't tell you how many of those I have unwound for clients. Those are not great investments. Now, if you're not going to throw your money in the stock market and you're just going to, like, I don't know, you go spend it at Neiman Marcus anyways, then yes, I'd probably rather you have that. But like those are meant, the insurance company is getting something out of it, and why they recommend those products is their commission is way greater. They get a commission off of it, right? So they're incentivized to not maybe sell you what the best policy is for you, but they're more incentivized to sell you what is the highest commission for them. And so like being fee only, for example, like not selling you any products. You are paying me out of your bank account or on your credit card that you pay off every month, and that's it. If I recommend something to you, is literally in your best interest. And the story I have, which is why I started my own company, is I started investing when I was 19. I love this stuff, clearly. And I wanted a Roth. And I went to my parents and I was like, I know I got an internship, but I'm not helping you pay for college. I want a Roth IRA. Give me your financial advisor. They couldn't really say no to that. So I started investing, and then I was like, wait, I've never paid this financial advisor, and I don't think my parents are paying him. Like, how's he getting compensated? So I asked him one day, and I was floored at how he was getting paid. Like, he was getting paid as, first, he was taking a percentage of what he was managing for me, which is, that's kind of normal. That's sometimes is not as bad, but then it gets worse. He got a commission off of any investment he recommended. So, hey, Heather, go in this mutual fund, and he got a kickback of almost like 2 to 5% on that. Then when I had gains, he got a percent of that. And some of them were my ideas, like Apple in 2008. And when I had to sell it because of independence reasons, because I was going into a Big Four accounting firm and I couldn't own it, that's a story for another day. It was really sad. I had to sell it, and I had a great profit on it. And you know what? He took a percentage of that too. Fees upon fees upon fees, which means less money that can compound for me. I was floored. So that's why, like, I get really passionate about talking about this fee only fiduciary model. Is there's ways in, and I don't love it. And that's why, like, to run my firm costs so much, because there's so many financial advisors that have unfortunately take advantage of people, because it's an area that we don't educate people in, right? Like, it's sad, but like, it's really hard to figure out, hey, it's like an auto mechanic, right? Like, I have no idea about my car. Like, they could tell me I need this da-da-da thing, and I have no idea. That's like how I put myself in other people's shoes. So it's like, you just trust and you pay. But like, that amount of money, if I would have stayed with him, I would not have been where I am today, because that would have been so many percentage of returns that wouldn't have been compounding. And that adds up to hundreds of thousands of dollars. So yes, for example, could I take a fee out of my client's investment accounts because it's easy, because it's hidden? Yeah, I could. But I know that that's taking away from the returns. Like, I need to be a fee on your cash flow. Like, you have to see it. And does it mean I have to work harder? Does it mean I have to like produce value? Yes, but a lot of fees in the financial world are hidden, and that's one of the biggest problems I have. Not to go on my soapbox, sorry.
I think that's huge. And that kind of answers, one of our girls asked the question of like, what are your fees and how often do you check in with clients? And kind of when you're starting with clients, because we kind of talked about the onboarding process as well, what does that look like? How do you get acclimated with your client to figure out how you best fit them specifically and their goals?
So I'm trying to decide. I guess I'm going to get a little personal here. So like, one thing that's really important to me, if you couldn't tell, is the why. And so like, the first meeting that I have with my clients, I definitely ask for all the financial stuff. I don't send them a questionnaire. I ask them all the questions so that so I know what to ask for, and like, I get interesting stuff from it. But before I will even draft the financial plan, the second meeting is we are really getting down to my client's ideal life. And there are these 3 specific questions that literally get down to it. That's where the registered life planner comes in. It's actually from a CPA and a financial planner that did these 3 questions. I won't share them because it literally would ruin the exercise. And I hope everyone will eventually go through this. Not working with me, any like registered life planner would do an amazing job. But I had to go through it in Hawaii with a group of financial advisors, and I was recovering from a miscarriage. And what a painful, traumatic, emotional time. And I wanted kids more than anything. And they had to deliver in my vision to me that I was going to have kids while I'm literally healing from a miscarriage. And it's like the most emotional time you can go through with this group, because you're talking about all this stuff. I mean, people got divorced after this. Like, it was crazy what happened after this group together, but that's how powerful this is. And I'd gone through fertility. All these things went wrong. 6 months later, I was pregnant with twins naturally. And like, it's just like, that's what really lights me up is, yes, I have all these credentials. I understand the money, all of that stuff. And it's important because that then gives me the power to make this their dream come true. And so mine was like exactly what I'm doing today. I wanted to be a mom. I wanted to be a really successful business owner. I wanted to be the freaking breadwinner for my family. Like, my husband doesn't have to work anymore. And that is like, I would have never thought that would have happened. It took me a few years, but like, that just, you see that's my why. And like, I want that why for all my clients. So anyways, sorry, I went on a tangent. Vision. Then I start drafting the plan once I know that, because I literally draft their plan with their vision. What lights them up? What is their passion? And then I always have questions. There is never a time I review client stuff and I'm like, oh, this all turned out exactly what they told me. No, I love all my clients, but no. So then I ask questions. Then I finalize the plan based on those questions. We review the plan, and then I help them implement it. And this is probably the most important thing, which is why I want to do a group coaching program instead of some course or whatever, because accountability is so important in today. And I'm big on that. And I literally tell my clients, and they know it. They're like, oh, I'm scared to tell Heather this, but I like that in a way. Like, not like I'm going to yell at them, but like, you got to show up and do the work. Because if you don't do the work, you're wasting my time. You're wasting someone else's spot. You're wasting everyone's time. Like, I want this just as much for you, but you got to be here with me. It's a partnership. So, how often we meet, I don't give times, because every client's plan is different. Every client is different. Every human is different. So it's what's it's going to take. Now, am I on the phone with them every day? Absolutely not. That would break my model. But am I on call if something comes up? Yes, not at midnight, but in general business hours. It's a big promise, but I'm available. And it's based on their needs to get them implemented. So the first year, we definitely meet the most. It's getting the financial house in order. It's a mess. I haven't met one client where it's like, oh, you just gave me this clean, pretty box. No, I'm like, oh, clean up. Let's clean up. Then year 2, year 3 is when I love it, because now I have their whole thing, their whole life in my head. It's now organized. And we're now in the, like, we're moving, we're going, we're doing the things, we're getting them towards their vision while building wealth. And so I require my clients to meet me on Zoom every 2 times every year. That's the minimum, because otherwise, if 6 months goes by, too much goes on. I definitely talk to most of my clients way more than that. Sometimes it might be a quick phone call. Some, like my tech clients, really love email, so that's fine. I meet my clients where they are. I want them to succeed. They understand that I have other clients, so they're just good humans, and it works. I don't know how else to explain it, but I am very busy in March and April and November, though. I will say that, because of tax planning and taxes. So that's kind of how I work with my clients, but you know, it kind of also depends on what's going on in my client's life. Some years they don't have a lot going on, and some years they do. It's just, I hope that all my clients don't have the big life events all in one year. I'm screwed.
And that happens sometimes. I know
Yeah,
one year for me,
topical.
it seemed like everything happened. And I was like, well, I guess this is the year. For your group coaching stuff, are you only accepting your clients, or is that open to other people to
that's
work in
for-
this coaching?
No, so that's like completely separate. So why I did that? Oh, so I didn't,
Okay.
I'm talking about fees, and then I'm not saying fees. No, I'm the real person. I will own my fees. So my minimum is 20,000 a year in Townsend Financial. It's paid monthly or quarterly. Half of the fee normally goes through business, because half the time we're talking about business, so I can justify it as a tax deduction. Definitely not 100% though. And then, yeah, so paid monthly or quarterly. It goes up based on every million after 3 million, because yes, wealthy people are complicated, and it goes up, like, I think 4,000 every year if you make another million. Personal residence and business are not included in the net worth calculation. Don't care. I don't care if someone has $1 million equity in their house. I mean, I do, but it doesn't make my life more complicated. And then my consulting business, the reason I'm opening that is my minimum is very high. And you can tell I want to help people at a lower price point, but I can't do it one-on-one. I'm maxing out very soon on the one-on-one capability, but I want to give people these tools, but I know that I don't want to just do a course. I want them to be able to ask questions, because someone might get stuck. They might, they need accountability. And so I'm offering for S Corps I'm going to try it out. I want to see, I want people to really get a lot of value, but it's going to be 5 weeks starting in the end of October. I think it starts 10/23. You guys are the first ones to hear about this. I have to announce it, actually. I just finished the website today. But yeah, it's a totally different LLC. I take my own advice just so you guys can apply. So different LLC. And I think it's like $7.99. I'm going to discount it at first. And I will literally walk you through the tools, make you do the spreadsheet, like talk about all that and make you implement it. And I just hope to bring clarity to people who can't afford the 20K. My goal is to get them to be able to afford the 20K, right? But you got to have someone teach you how to do that.
Yeah, that's awesome. I haven't heard I've heard of finance planners doing, courses, but you're totally right. For something like this, you need the accountability, or it's not going to get done. And I could watch a course on this and I would probably never do anything. And that's coming from somebody who loves the finance side, and I still don't.
And you will have homework in my coaching program. You have to do the things. But I'm also offering to refund at the end of it if you didn't get value, because again, if you can't tell, I want people to feel empowered. Like, that's the point. And if you don't, then I failed in my eyes.
And how much did you say the course was? Or the the anti-course?
Yeah, the coaching program, the group coaching program is $7.99.
Awesome. And you said that was starting in October?
Yeah, 10/23. It's going to be every Wednesday at 10 a.m. MST time for 5 weeks and ends before Thanksgiving. And the reason I'm doing it in that exact timing is so that you can get your house in order to start fresh for 2025, but you do not want to be doing that during the holidays because everyone's hair is on fire during the holidays. So
Yeah, that's great timing, actually. If anybody wants to sign up for that, where would they go?
So I will put the link on my Instagram, and I also have a website now as of today. So it's heathertownsendconsulting.com. I can't believe I'm saying this. It's like another dream coming true as I'm saying this out loud. And yeah, and I'll put the link on my Instagram, which is heather.townsend-financial.
And we'll link all of this, guys, too. And we have the slides, so this will go up on our YouTube, everything. All of her contact information will be here, and it's right here as well, so you can screenshot that. So you'll be able to come back, revisit this, sign up for anything that you want, and ask her more questions.
But I do want to just end with something. You guys, anything is possible. Again, I know money is like scary or can be overwhelming, but I can't tell you the ships I've turned around when people have been in despair or whatnot. Anything is possible. So if anyone is feeling overwhelmed by this, I hope not, but if anyone is, like, it doesn't have to be. It really doesn't. Money can be amazing and do a lot of good. So it's powerful.
Yeah, absolutely.
Mhm.
Before we let her go, does anybody have last questions? I think I made it through all the questions in the chat, but if anybody has a question, you can unmute yourself and ask quickly.
Oh, I'm just looking at the chat. I've been a little behind.
Oh,
You guys! Oh, you guys are gonna make me tear up. Thank you. Go get them. Go get them. That's what I say. All right, any questions? No. I made it in an hour, like I promised. 2 minutes to spare. I did
Yeah,
good.
that was perfect, actually.
Well,
That
I'm
was
sorry.
so
People do not
good.
want to, like, some people's brains are fried. Taxes and money is not the easiest thing to talk about. Like, yeah.
It's definitely overwhelming, but you've broken it down very simply, which is rare and allows people to actually get started doing something.
Well, that's the goal. So hopefully you get your house in order, take charge of finances, go do some good. And
I
spoil
love
you.
it.
Treat yourself, whatever that is. All right, you guys, well, have a great evening. I'm gonna go have a glass of wine after
Thank
this.
you so much, Heather.
Thank you. All
That was
right. Well,
awesome.
thank you for having
Yeah.
me, honestly. And Morgan, it was lovely meeting you. And thank you for this opportunity.
Oh, absolutely. And you'll be hearing from me and DeAndre very soon. We're going to take your
No,
January
I can't
spot
wait
for
to
sure.
meet him. Yeah. Literally, when you meet someone and you're like, oh, I like did not know what I was walking into. And like, we could have sat, I had to like go get my kids. We had to leave. It was amazing.
I
Yeah,
love
I
that.
could have sat there all day long.
All right. Well, I gotta
All
just.
right.
All
Have
right,
a
you
great
guys.
night, ladies. Thanks
All right.
again, Heather.
Awesome.
Bye.
Bye.
Bye.